you don't need to worry about managing your position after that. You just buy the options. You can go to sleep at night and relax. You don't need to worry about getting liquidated overnight.
Yeah.
You understand your risk. It's all factored into the whole purchase. And that's different to a perpetual, because if you lose a lot of money, you have to constantly manage the position. You've got to go back and make sure you don't get liquidated. The three things that I really like about options are, the first thing is they have this interesting payoff, which is different to a perpetual future, which is like, 1 for 1. Every dollar change in the underlying token gives you like a $1 profit or a $1 loss.
Right, it's like a straight line up or down, right?
Exactly. If you were to chart that and put it on a graph, you would see like a straight diagonal line that tells you the payoff. Whereas with an option, the payoff is a little bit different. As the price changes, the returns compound onto each other. So if you were to graph the same thing on an option, you would see this sort of like curved line that sort of like angles upwards.
Right. I've seen some people describe it as like a smile.
Yeah,
right.
Yeah.
It's like,
that is part of it too, yeah.
Yeah,
There's like volatility, smiles, like, yeah. So, but they have these like convex payoffs, which make it really interesting for people that, especially in a bull market, like if you go long on a call option and, the price of Sol or BTC or ETH pumps like by 10% or even 20%, like you don't make 10% or 20%, you make like a lot more than that. A lot more, yeah. And so that's the first thing. The second thing is they have this property that, like you mentioned before, the downside risk is fixed. So you just pay like a fixed price for the option, and you don't need to worry about managing your position after that. You just buy the options. You can go to sleep at night and relax. You don't need to worry about getting liquidated overnight.
Yeah.
You understand your risk. It's all factored into the whole purchase. And that's different to a perpetual, because if you lose a lot of money, you have to constantly manage the position. You've got to go back and make sure you don't get liquidated.
That's a good point, actually, right? Like once I buy the option, it's done, it's finished. It's like, it's a thing which I own now. It's like I own this contract that says whatever it says. And whereas, with a perp, it's like, wow, okay, it could moon tomorrow, it could dump tomorrow, and then maybe I'll lose my margin or something like that. So a bit more stressful, right? But options maybe a bit more peace of mind, a bit easier to understand.
Yeah, exactly. It automates the management of the position, which is nice. And it also limits your risk. If the price goes down or up like quite a bit, you're only exposed to the price of the contract that you paid up front.
Yeah.
And the third thing that's really interesting about options is more for sophisticated traders. But if you're selling options, which is a little bit more involved than buying options, selling options allows you to take a view of volatility. So if you think that the market's not going to go up or down by very much in the next like weeks or months ahead, you can take that view and actually sell options, which isn't actually possible with futures. So for people that have that opinion, they're able to express it with options where they're not able to do so with futures.
Right, so it's like if I have a coin which maybe I think it's going to be super volatile for the next couple of weeks, right? Like some big announcement, some whatever it is, and I think that the price maybe might go down or something like that, right? I could sell an option, which is kind of like an obligation that I'm going to pay someone some amount of money if the price reaches that point. Is that correct?
In that case, you would buy a put option, which is a contract that says, you'll profit if the price goes down.
Right.
You would only sell an option if you think the price isn't going to move much.
Right, okay.
So if you have a view that...
That's an interesting thing as well, right? Because I think when people, they're looking at their phones all day, right? They're looking at, prices. I think people get like maybe a good understanding of, is the market, crazy volatile right now? Is like nothing happening? So maybe this is a good strategy to do in times where it's like, okay, it's just been stable. Like Bitcoin's kind of been pretty stable recently, around 20K. Maybe that would be a good sort of idea for people to understand that even in these times where it can be quite stable, there's opportunities there as well.
For sure. It adds another dimension to your like tool set in trading. So like previously, without options, you can take a view on direction with futures. So you can say like, I think the price is going to go up or down.
Yeah.
With options, you can say, I think the price is going to go up or down, but you can also say, I think the price isn't going to go anywhere.
Yeah.
And you can make money out of that view.